If you're an S-Corp owner paying yourself back for business expenses through payroll or distributions, you're literally throwing money away. There's a strategy that 99% of S-Corp owners don't know exists. And the crazy part is the IRS not only allows it, they encourage it. Stay with me because what I'm about to show you could be the difference between paying massive taxes and keeping that money in your pocket. Hey everyone, I'm Stephen Lee, a CPA and certified private wealth advisor. I've been helping S-Corp owners save hundreds of thousands in taxes for over a decade. And today, I'm sharing one of my favorite IRS-approved strategies that most CPAs don't even know about. Let me tell you about Sarah. She owns a consulting S-Corp, makes about $400,000 a year, and came to me frustrated. She said, Steve, I'm spending thousands on business expenses, travel, meal, home office costs, supplies, but I'm not getting any tax benefit. My old CPA told me I can't deduct them as an S-Corp owner. Sound familiar? Here's what was happening. Sarah was either paying herself back through additional W-2 wages, which meant paying payroll taxes on money that should be tax-free, or she was taking distributions and losing the deduction entirely. But there's a third option that most people never hear about. It's called an accountable plan, and it's about to blow your mind. What is an accountable plan? An accountable plan sounds fancy, but it's actually beautifully simple. It's an IRS-approved system that lets your S-Corp reimburse you for business expenses completely tax-free. No payroll taxes, no income taxes, nothing. Think about this. Instead of paying yourself an extra $10,000 in W-2 wages to cover business expenses, which would cost you about $3,000 in payroll taxes alone, your corporation just cuts you a check for $10,000 tax-free. But here's the thing. Most people mess up. The IRS has 3 specific requirements, and if you miss even one, they'll actually reclassify everything as taxable wages. I've seen business owners get hit with massive tax bills because they don't know these rules. The IRS gives us these 3 rules, and they're non-negotiable. Rule number 1, business connection. Every expense must be directly related to your business. Travel, meals, supplies, home office. If it's ordinary and necessary, you're good. Rule number 2, substantiation. This is where most people fail. You need receipts, logs, documentation that shows the amount, date, place, and business purpose. And here's the kicker. You have to submit them within 60 days. And rule number 3, returning any excess payments. If the company advances you $1,000, but you only spend $800, you have 120 days to return that excess $200. Miss the deadline, and the IRS treat the entire $1,000 as taxable wages. I know, this sounds strict, but trust me, tax savings are worth the discipline. Here's what you need to watch out for. I see these mistakes all the time. Mistake number 1, no written policy. The IRS doesn't technically require it, but trust me, you want documentation. I've seen audits where this saved people. Mistake number 2, sloppy record keeping. I think I spent about $500 on supplies. It doesn't cut it. You need receipts, dates, and business purpose. Mistake number 3, mixing personal and business. The moment you reimburse personal expenses, the IRS can throw out the entire plan. Don't risk it. Mistake number 4, not returning any excess payments that I just talked about. This is the big one. Miss that 120-day deadline, and everything becomes taxable wages retroactively. So you want to make sure you don't make that mistake. Here's a bonus strategy that most people don't know. It's the home office reimbursement goldmine. As an S-Corp owner, you can't take the home office deduction on your personal return, but your corporation can reimburse you for using your home for business. Let's say your home office is 200 square feet out of 2,000 square foot home. That's 10%. And your annual home expenses are mortgage interest is $30,000, property tax is $15,000, utilities $6,600, insurance $2,200, maintenance $3,400, total of $57,200. 10% of that is $57,220. Your corporation can actually reimburse you tax-free that amount each year. And at a 35% tax rate, That's over $2,000 in tax savings from your home office alone. So how do we implement this? Here's exactly how to set this up. Step number 1, create a written accountable plan policy. I'll link a template below. Step 2, set up your expense tracking system. I recommend apps like Expensify or even a simple Google spreadsheet or Google Doc. Step 3, train yourself on the 60-day submission rule. Set calendar reminders. Number 4, establish the 120-day excess return policy. Make it automatic. And step number 5, keep meticulous records when in doubt. Over document. The key is treating this like the serious tax strategy it is. This isn't about being casual. This is about following the IRS rule to the letter so that you can save massive amounts of money legally. Now, what I just showed you is powerful, but it's just the beginning. In my practice, I combine the accountable plan with other S-Corp strategies to create what I call tax stacking. For example, one client is saving over $100,000 per year by combining the accountable plan with strategic salary optimization, retirement plan contributions, and proper entity structuring. If this feels overwhelming and you'd love step-by-step guidance, I'm running a business owner bootcamp starting this month. It's 5 live, interactive, private sessions where I'll walk you through advanced tax planning, reasonable compensation, retirement strategies like these, and optimizing your entity structure. You'll leave with a personalized tax and wealth plan you can actually use. Spots are limited, so check the link below to reserve your spot today. Look, if you're an S-Corp owner and you're not using an accountable plan, you're literally paying taxes you don't owe. This is IRS-approved, court-tested, and could save you thousands or tens of thousands every year. I've put together a free accountable plan setup guide. The link is in the description below. Grab it now while it's fresh in your mind. And drop a comment below and tell me, what business expense are you currently paying out of your pocket that could be reimbursed tax-free? I read every comment and I'll personally respond with specific advice. Until next time, have a wonderful day. Bye.